please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, welcome. This is Chartbusters, the stock show where we highlight all the buzzing stocks of the day and get you expert advice on how to capitalize and trade on those stocks. All that packed in the next half an hour. I'm Bangla Malu and with me today is Surabhi Upadhyay. Good morning, Surabhi. As we speak, yet another red day for our markets, though we're hovering around that 10,100 mark, very close to yesterday's low of 10,096, perilously close to those levels. Yes, in the morning we did go below those levels. The technical watchers perhaps would be keeping an eye out on the 100-day moving average, which is 10,067. But as we speak, some recovery seen in the mid-cap space, up about 0.4% from the low point of the day.
Exactly. So I'm going to try and be an optimist today because, yes, we are trying to claw our way back towards that level of 10,100 that Mangalam spoke about. And the big boys, they are really trying to fight back for the bulls, both Reliance and Infosys doing their bit. Actually, even TCS is trying to recover. On the mid-cap side of the market, it continues to be extremely stock-specific as usual. But some of the stocks, and not really mid-caps, I mean, pretty big by capitalization levels, but Bharat Forge is something that really stands out today. Not just the truck wins or the truck orders in the US, but also the commentary that we got from the management. That's a 3% up move. There's some buying that's come back in Tata Global. So yes, as you're saying, some of the mid-caps looking good.
Before we go to Ashwani, just a couple of stocks from the mid-cap space which are buzzing. Our ticker team is telling us about Jet Airways, which is at the low, which has moved from the low point of the day. Pull up something like an Interglobe Aviation. That one too has gained some traction over the last few minutes. Interglobe Aviation is at the high point of the day, and we have NBCC2, which is trading towards the high point of the day. So on that note, let's welcome Ashwani Gujral. Ashwani, what would you make of the markets? The Nifty still consolidating, the mid-cap showing some bit of recovery. What does one do?
Well, I have information for shorts which were taken today morning that chances are they are trapped because market is not showing follow through on the downside. In fact, Reliance is moving back from its 50-day moving average. The Bank Nifty has hit its 50-day moving average. So a lot of strong components are at strong averages. So my sense is that maybe today we could close closer to the high point of the day, and the low has been made. So if you are short, cover your short. If you want to go long, this is the time to get long intraday, both on Nifty as well as Bank Nifty. And all of these recoveries that you are seeing basically means that at lower levels, even on such days, sometimes fund buying starts to happen, and that traps a lot of short traders. So given that today morning's action is not conducive for remaining short in the market. As far as individual stocks are concerned, DLF is a buy with a stop of 226, target of 240. Bit of real estate day, so Kolte Patil is a buy with a stop of 368, target of 385. And NBCC is a buy with a stop of 250, target of 275.
Ashwani, I started looking at real estate because a lot of these realty stocks are actually doing quite well today. And not just realty, let's pull up some of the other movers now, because the mid-cap market, suddenly it's looking like it's coming to life. So, for instance, something like KEI Industries, pull up the workers in the intraday over there. There is a bit of action building up. Something like an Hexaware is pretty much at the highs of the day as well, with a 4% up move. So interesting moves. Some mid-caps definitely looking like they're stirring up on the upside. On realty, apart from Kolte Patil, Ashwani, what thoughts on DLF now?
DLF is performing, but maybe not as well as the mid-cap real estate stocks. But it looks like it's heading towards 255, 260. But the top picks remain, Kolte Patil, Sobha, even Godrej Property, Prestige. So there is definitely a bull market that's on here.
All right, Ashwani, you have a view on any of the financials? They're moving. L&T Finance Holdings. We have PNB from the PSU bank space, which has moved higher as well. And apart from the financials, we have the aviation stocks. They're doing well. Any trade there?
See, if the market has to move back up, financials will have to participate. So all these financials which are moving up could go and close at the high point of the day because they've been, smashed up quite a bit.
Right.
And chances are aviation, all kinds of stocks which have come off for last 3-4 sessions are going to see a strong pullback. So that appears to be the base case, that try to get into stocks which are beaten up, and you could have serious upside towards the afternoon, because by afternoon, if the markets don't make a fresh low, you will see upside. And given the way we fell in the morning, 200 stocks were higher and 1200 were lower. That sort of action often means that the shorts are pretty much locked on the downside, and now they'll take the market higher through the end of the day.
Okay, so is a turnaround coming? Right. Thanks for that advice, Ashwani. Thanks for getting us the trading ideas of the hour as well. We will keep coming back to you through the day. Let's now get you some more market opinion. In an exclusive conversation earlier this morning, we spoke with William Boiter, Global Chief Economist at Citi, to help decode what the U.S. tax reform bill means for the U.S. economy, as well as for markets, both developed ones like the U.S., as well as the likes of India.
Tax cuts that currently look likely to be passed, actually are passed, then an extra $1 trillion worth of national debt building up over the next decade, and it could easily be more. So the deficit effects are going to be economic negatives. Most emerging markets are in good enough shape financially and economically to be able to cope with it. The reality of a significant corporate profits-friendly tax cut will favor certainly U.S. Markets, equity markets and risk markets generally. It wouldn't do much for risk markets in the rest of the advanced economies. It will be somewhat negative for emerging markets, as higher rates, both short-term and long-term in the U.S., reduce capital outflows to emerging markets.
On the move once again. So NBCC, something that Mangalam has been talking about, and that stock's now moving almost 1.5% higher. The other one is Radico Khaitan, back to what it does best. It's again moving towards the highs with a 1% up move. So yesterday, a couple of these stocks were subdued. It seems the buyers are back on the street today. But right now, let's focus on that promised corporate conversation. Balaji Amines is the company on our radar today. They have received allotment for around 3.6 lakh square meters of land in Solapur. This land will be used for expansion projects. To get more details, let's get Mr. D. Ram Reddy, Joint MD of the company, with us on the phone line. Mr. Reddy, good to be talking to you this morning. First of all, do you have to pay anything for this land? What is the specific use? And by when are you looking at commissioning, if it's additional capacity you're commissioning here?
Yeah, we applied for the government a few months back. Government of Maharashtra has allotted us about 90 acres land in Solapur, Chincholi, MIDC area. This is for a proposed mega project. The government of Maharashtra has also given the approval for the mega project status for about 300 crores investment in this thing. We are just evaluating multiple options of the products. Maybe in coming 1 or 2 months, we will come with the detailed product list which we are going to start. And for this, we need to pay about 15 crores amount for the cost of land to the government of Maharashtra.
All right, Mr. Reddy, 15 crore land is what you're paying for, 15 crore rupees is what you're paying for the land, and you said you will be investing about 300 crore rupees in a product that you are likely to decide over the course of next 1 to 2 months. Any inkling of what product it could be, and secondly, where will you get that funding from, that 300 crore rupees that you're speaking of?
From the 300 crores, we will be having about 120 crores from the internal accruals of the company, and the balance will be going for the banks. And the products, definitely there may be something from the existing products expansions and some of the new products. So if you see our record, most of the times we will go import substitute, first time in the country. Such type of products we have in the pipeline and the R&D. Those we are just evaluating the options which will come in the news maybe next 1-2 months. We will let you know. In the meantime, we are submitting the papers to the Government of India for the environmental clearance.
Hang in there, Mr. Reddy. You said 120 internal accruals. The remaining will be from the banks. Are you saying that you will raise 180 to 190 crores in debt? You have just about 45 crores debt on your books. So you will be quadrupling the debt that you have on your books.
Yes. By March, it will be 26, and by end of 2019, we will be debt-free. So by the time we will be going for this new expansions, by the time we go for this 200 crores, we will be debt-free.
No, Mr. Reddy, so can you help us understand this? Not quite making sense. You right now have 45 crores of debt, right?
26 crores something.
Okay, 26 crores.
26. You are going to be taking on at least another 200 crores of debt for this particular project?
Yes.
Okay. By when will you take on this debt? What's your borrowing schedule like?
But this will be during the 18-19 we will start land digging and all the things.
But sir, you are also saying by 2019 you will be debt free. So how does that work?
This debt free, the existing debts will be free by the time we'll be paying all these 26 crores whatever we have presently.
Yeah,
but you'll still take on the new 200 crores.
Yes.
So then that will translate into what sort of a debt equity ratio, sir?
It will be 35 to 65 ratio will be there.
All right. Any inkling of the potential revenues coming in from these plants, the 300 crore rupees that you are going to invest? What kind
normally
of revenue
in our this thing specialty chemicals, we will see 1:1. Suppose we are investing 300 crores, we will see between 300 to 450 crores of revenue minimum.
And margins would be how much? 300 to 450 crores revenues. What kind of EBITDA margins would you do?
We are assuming that it should be same what we are having presently, between 18 to 20% of the EBITDA margin should be there.
So 20% of the EBITDA margins would give you about 60 to 90 crores in terms of EBITDA. And you would be borrowing this money at what cost, Mr. Reddy?
It may be 9%. Current what we are seeing 8 to 9%.
All right, so that would be around 20 crore in finance costs. So the next net benefit on your earnings should be about 40 crores pre-taxed on account of this expansion that you are undertaking?
You are right. You are right.
Okay, so just a word then on the revenue trajectory. Now, you told us last time that for the current year, you will probably do around 850 to 900 crores on the top line. Does that estimate stand?
You are right.
So
that,
right. Okay.
800 to 850 crores surely we will be doing before
for FY18
end of this financial year.
And now how does that number change, Mr. Reddy, for FY19? Because you're saying that it's almost a 1:1. So if your project cost is 300, you're expecting revenue in the same...
will not come in the 19. This sales will come only in the 2021 onwards.
Okay, so then what's the revenue?
Without this, I told earlier also by 19 we'll be having around 1,050 crores revenue, for which the existing expansions are in line.
All right. So we'll take into account all your specialty chemicals business, Mr. Reddy. But if you take a look at the other business, you have the hotel business as well. We understand the only 5-star hotel in Solapur. Any plans to expand out there? What is the kind of occupancy that you have out there? The kind of revenues that you make in the hotels business? Is that an area of interest?
No, as of now, we don't have any new plans up for going for any new expansions in this hospitality industry. But presently, we have 60 to 70% occupancies there in this hotel.
How many keys in that hotel, sir?
Yeah, we're doing 60 to 70% occupancy.
And how many rooms in that hotel?
We have 129 rooms.
You want to sell it off? The going rate would be around 1.2 crores per key. You want to sell that off and raise about 120, 130 crores?
You are talking about the investment, what we've done?
No, the hotel that you have, you said you are not too interested in expanding that business. You want to sell that and raise some money?
No, we are not. We are not going to sell also. We are not going to invest also. This will be as is a basis. Yeah.
All right, fair point. Thanks a lot, Mr. Reddy, for joining in. That was Mr. Reddy indicating that 300 to 450 crores is the revenue potential of the new land on an investment of 300 crores. But mind you, he will be taking 200 crores of debt. Net pre-tax benefit should be around 40 crores once the plant is on stream. This chart busters, the mid-caps underperforming as well as the frontline indices, but a lot of small caps, they're buzzing. Setco Automotive is the one that really stands out, up nearly 9%. As we speak, most of the gains coming by in the last 15 odd minutes. In fact, the stock is at the high point of the day with a gain of 25% this week. Yesterday, we had the management. He said 1,000 crores revenue over the next 3 years and 17% EBITDA margins. But the other one is a mystery stock, Nitco Tiles. That one's up nearly 25% this week, 145% this year. Still a loss-making company. We need to figure out what exactly is happening out there. But we'll keep an eye out on that. Talking about keeping an eye, all eyes will be on the crucial RBI policy decision tomorrow. The MPC members headed by the Governor Urjit Patel will begin the two-day meeting today. Ahead of this crucial decision, Lata Venkatesh caught up with the CNBC TV18 Citizen Monetary Policy Committee, and the unanimous expectation is of a no rate cut.
It has to be seen in the context of the first quarter. In the first quarter, we do know what happened. It came down. There was a destocking issue. We knew the destocking was going to get sort of overcome in the second quarter. That showed up in manufacturing. The problem, of course, is we don't know, where we are on the cycle.
Samiran, the growth looks like needs less support now. Would you say?
I don't think we need any particular stimulus at this moment, but at the same time, we should ensure that there are no more headwinds coming, which will kind of derail the growth process at this moment. Let's face it that global growth it cuts both ways. While it helps us increasing exports, at the same time we have to be worried about the commodity price impact coming out of it. So from that perspective, we have to be much more careful. We have just done significant structural reforms.
Sonal, let me get the global context as well in. Do you think the global growth is extremely positive? What should we expect in terms of rate cycles as well as global commodity prices? What should the MPC worry about?
The world that we are stepping into in 2018 as of now does appear like this Goldilocks kind of a scenario can continue for the foreseeable future, and a bit of policy normalization continuing from the Fed on both rate cycle and on the balance sheet normalization. The European Central Bank, we think, will announce a tapering of its asset purchase program mid 2018, and we have a lot of other global central banks also normalizing.
How worried should we be about inflation? I'll come to growth as well.
Yes.
But inflation?
Lata, so I think, since the last review, all the inflation risks have moved in one way. Oil prices are now 12% higher than they were when the RBI last met. They're 12% higher than what's presumed in the RBI's inflation forecast. You saw some unseasonal increase in vegetable prices. Global commodity prices, metals have gone up. But I think most importantly, if you look carefully at core inflation, and this is not trivial because you've got to adjust for petrol, diesel, housing, what you see surprisingly, or at least at the time, was that core momentum both in September and October was quite steep. Prices went up 0.5% month on month, seasonally adjusted, right? This was not GST related because the GST impact was July and August. Now that makes sense. If you look closely at the GDP numbers that came out, the headline understates the kind of recovery in the private sector. Adjusted for agriculture and government spending, we've gone from 3.8% in the first quarter to 5.5% to 6.8%. So now the pieces kind of add up that India's domestic recovery is nascent, but is occurring, maybe a little more strongly than the headline numbers suggest.
Soumya, I wanted the fiscal picture. One of the big problems that the MPC bothers about, will we see a fiscal slippage? How should the MPC add up those numbers?
See, in terms of the fiscal, I think there is a lot of, consternation in the market in terms of a possible fiscal slippage.